Well, good morning, everyone, and welcome to BDO's latest Working in Australia webinar series. Today, we're going to be talking about Fringe Benefits Tax as we approach the compliance season. So everyone who loves FBT has been sitting on the sidelines in the off-season just waiting for our turn to shine, and that's just about upon us. So we're going to spend some time today talking about what we need to do to get ready for the compliance season ahead. Now, before I begin, I'd like to acknowledge the traditional owners and custodians of the land on which we meet today, which here in Sydney, it's the Gadigal people of the Eora Nation. We pay our respects to elders past and present and celebrate the diversity of Aboriginal people and their ongoing cultures and connections to the lands and waters of Australia, wherever you are attending this webinar today. So my name is James Trainor. I'm a partner here in BDO's Sydney office, and I specialise in employment and expatriate taxes. And I've been operating in this particular field for a bit over 25 years, so it's getting on a little bit now. And joining me today, coming straight off the bench, ready for the new season ahead, firstly is Stefanie Merlino. Stefanie is a people advisory partner in Melbourne. She specialises in global and expatriate tax services and employment taxes and has over 17 years experience in all aspects of employment tax compliance and consulting. She's admitted as a solicitor in Victoria and is a registered tax agent. We also are joined by Judy White, an executive director in BDO's Brisbane office in the tax division. She provides taxation advice to a portfolio of small and large entities and has extensive experience in advising and applying taxes to all business, including a particular interest in not-for-profits. Judy started with BDO in 1995. So thank you, Judy. She's a chartered accountant, chartered tax advisor, a fellow of the CAANZ, a member of the Tax Institute, and a fellow of the Institute of Public Accountants. Ben Watkinson is a director in BDO's tax team in Sydney. He has over 19 years experience providing specialist personal and employment tax advice to public and private companies and government organisations. He has extensive experience assisting clients with revenue authorities' audits and compliance programs. He's a regular presenter at various employment taxes seminars and conferences, including CAANZ and the Tax Institute State Taxes Conference. And finally, we have Peta Lonergan. Peta is an Assistant Commissioner for Superannuation and Employer Obligations at the ATO. She's an experienced tax professional with over 20 years experience, having started out as a tax accountant before joining the ATO and received a CPA in 2002. She has extensive experience across a number of diverse roles in the ATO, starting as a frontline business auditor and tax technical specialist before progressing onto strategic programs. She is passionate about supporting and educating employers to help them comply with their tax and super obligations. Now, you eagle-eyed observers might have noticed that we don't have Peta up on the panel of presenters just at the moment. Now, we're experiencing some technical difficulties. Perhaps an Apple upgrade overnight might be responsible. So we're going to proceed with Judy's portion of the presentation right now. If Peta is unable to join, we'll hold the presentation of our webinar at that point, and then we will record the rest of the session, which we will then send to all participants later on. So apologies for that technical challenge to start with. So let me just touch on some of the housekeeping issues just to start with. So all participants are automatically muted, but we will be accepting questions as we go through the session, and you can submit them on the question tab. We'll try to pick up as many of those questions as possible. However, as you can appreciate, we have quite a number of participants today, and so if we don't get to those questions, then we'll look to pick them up after the session. I should also point out that we won't be able to answer questions on specific scenarios, and if we have Peta joining us later on, of course, any comments that the ATO is making today are general in nature and can't be taken as specific advice to a particular scenario. If you're experiencing any technical difficulties, there's a support button that you can click on there. And finally, as I mentioned up front, the session is being recorded, and that recording will be sent through to all registrants at the end of it, along with a link to slides and details of the participants who you are seeing today. Now, without any further ado, I'd like to hand it over to Judy White to run through the technical updates for 2025. Thanks very much, Judy.
Great. Thank you so much, James. Thank you for that terrific introduction. That was wonderful. And welcome to everyone. Good morning, and hope you're all doing well wherever you are coming from this morning. Thank you for joining us. So as you can see on the side there, I want to kick off with what's hot for 25. So yes, there are a couple of items that are particularly hot we would like to go through. The first one is in relation to electric vehicles. So we just wanted to point out to everyone to keep an eye on the plug-in hybrids. They are still FBT exempt where they meet the various conditions. They are for the 2025 FBT year, which is what we are focused on today. So that's great news. However, that particular exemption for plug-in hybrids is due to cease at 1 April this year at this stage. So for the 25-26 FBT year, the step one is that plug-in hybrids are no longer available for the FBT exemption. However, there is an exception where they will continue to remain exempt into the 26 FBT year and possibly further as well. This requires a financially binding commitment to continue providing private use of the vehicle on and before 1 April 25. So for this purpose, if there are any options to extend the agreement that do become excisable after 1 April, please be aware that that's not considered to be a financially binding commitment. So just wanted to discuss a bit about things to also look out for as we do progress through to next month as well. Secondly, the record keeping. You may be a little familiar with some announcements in the recent couple of years in terms of this great initiative that corporate records could be used. So those of you, as James kindly chatted about earlier, that are keen in this area of FBT would potentially also have been rejoicing, especially those of you that are very hands-on with records, rejoicing around the fact that instead of having to deal with the employee declarations that we do, that there would be an alternative record keeping option available. Now that is from 1 April 24. So we are here in the 24-25 year where reliance may be placed on existing corporate records. So that's a good start. I've probably got you all, hyped up and interested now in this particular record keeping issue here, that we now have an alternate. However, I do need to also mention that it doesn't apply to all fringe benefits in all situations. There are legislative instruments, which we'll look at once we get through this particular commentary. The next slide does have that information for you. So there are legislative instruments and certain conditions that need to be considered. So in summary, just in terms of those legislative instruments, what I think is a reasonable view is that what you would have had in those declarations that you may be familiar with, you still need that information that is outlined in the legislative instruments. So if there is an opportunity in your records and your systems in place that actually can capture that information already, then that's where this existing corporate records alternative might be for you. Now, if that's not the case, no worries, or if you just prefer to continue to do what you have been doing, you can continue to do that. So the standard employee declarations and travel diaries is also included in this as well. You can still do what you used to do, and those are still available. This is an alternative if you wish to use it. Also, just bearing in mind, I guess, with whatever you use, the record keeping corporate records that we're talking about here, all the employee declarations, that all that relevant information does need to be gathered and included prior to the due date for lodgement of the FBT return. And just lastly on this topic, I just wanted to mention that the ATO does have information on their website in terms of these alternate record keeping requirements. They also have 3 examples that may provide you with some additional guidance. Those examples are on travel diaries, work-related use of mobile phones, and also the living away from home allowance where the employee is maintaining an Australian home. The next slide talks about those legislative instruments. So you can see all the finalised ones there, and that gives you that snapshot of the sort of fringe benefits that might be covered by those. So that's if you're interested in considering relying on existing business records for the 24-25 year onwards. What else do we need to know? So just finishing off now with some rates and dates. This slide has some of the common FBT rates that will apply to the 25 FBT year. We also have the comparative for 24 there. So if you're like me, it's always nice to see where we were in 24. That gives you that little bit of reassurance that I'm in the right section and that's the rate I might be used to. So we thought that might be helpful. But what you might also see is not a lot of change on that particular slide there. So the FBT rate has remained at 47%. That means the gross up rates are also the same as they were in the prior year, because the gross up rates are a function of the FBT rate in the legislation. So if the FBT rate stays the same, so will the gross up rates. You will see, maybe not too surprising, unfortunately, the statutory or benchmark interest rate there has climbed again. So it was 7.77% in the prior FBT year. So for the 31 March 25 year, it is 8.77%. Those of you that do have car parking as potential fringe benefits, just got the threshold there is now $10.77. And also a shout out to our not-for-profit friends that might be on this webinar today. So for those of you in the not-for-profit industry that are the rebatable employers, that rate is still 47% rebate for you. And just lastly, we probably should quickly capture our lodgement dates and payment dates. So I don't know about you all, but certainly the calendar ticking over to March. I don't know where February went, but it's definitely a reminder to us that the FBT season 31 March year end is upon us. So where are we heading? You'll see in this table here that if the employer is lodging the return themselves, the due date for payment and lodgement is the Wednesday, the 21st of May. So right in the middle of the week this year. If you are using a tax agent to lodge the FBT return, then your due date for payment and lodgement is the 25th of June. Also on a Wednesday, so it's a 5-week extension. I got my maths right there. So just a particular point I'd like to make before we finish off on this slide, this topic, is noting that for those of you that did lodge yourselves and are now considering using a tax agent to lodge, that appointment does need to be processed by the 21st of May in order for the tax agent extended dates for payment and lodgement to apply. If you're already using a tax agent, that's fine. If you're already appointed, no worries. It's just if you may not be currently appointed, and it's not the tax agent just for income tax purposes. It does need to have the appointment under the FBT role. So I think that might be all I had to cover on the technical side as an introduction. I'll just hand back to James.
Thank you very much, Judy. Really appreciate your comments there. As always, it's good just to refresh ourselves around FBT. It rolls around every 12 months, and for those that aren't living and breathing it outside of that period, it's always nice to just get our headspace back into the FBT world. So thank you for that, Judy. Now moving along to our panel session. I'll first hand over to Peta Lonergan, Assistant Commissioner at the Australian Taxation Office, and she'll be joined by Steph and Ben to talk through key issues that have been identified by the ATO and by us as part of the FBT process. So Peta, thank you very much, and over to you.
Oh, thank you very much for inviting me along today. I love to talk about Fringe Benefits Tax, or FBT. Now, as you're aware, employers have several obligations to the ATO. So they need to pay their employee super each quarter. They need to report their payroll information via STPs or single touch payroll every time that they pay their employees. And they need to report and pay the amounts of pay-as-you-go withholding either weekly, monthly or quarterly. And that's all dependent on their withholding status. One thing that we do find employers often overlook is FBT. If as an employer you do plan to offer benefits, you really need to understand and comply with your FBT obligations. Now, what's been really encouraging to see is we are seeing employers putting an effort into understanding their obligations and the support that tax professionals are providing to their clients to help them meet their FBT obligations.
Thank you, Peta. We also have similar experiences with our clients. They want to do the right thing and meet their obligations. However, this can be challenging. I mean, the FBT regime, as we know, is very complex and administratively burdensome. I know from conversations with clients that very often the administrative burden, the time and effort that goes into preparing an FBT return is disproportionate to the amount of FBT that's ultimately payable. Given that, have you got any tips to share with employers to mitigate the risk of making errors that ultimately lead to adverse FBT implications?
Look, Stefanie, that's a really good point. And I think it's really important that employers set themselves up from the beginning. If you know what benefits you are providing, then you know what records you need to keep, you know how to calculate that liability rather than coming at it at the end and trying to work it out later on. So it really is important that they understand how FBT works. The best time to do that is before you actually provide the benefits, but we know that doesn't always happen. Now, there are a few steps that employers need to be aware of to get it right. There are a range of different fringe benefits that you can provide to your staff. And as I said, the way you calculate them and the records that you keep will vary depending on that type of benefit being provided. So if you know what the benefit is, then you can set those systems up early. Now, providing fringe benefits can also have an impact on your employees' eligibility for other government payments. So you may need to talk to your employees to make sure that they actually want a benefit because it may have downstream consequences for them. Now, there's a lot of good information on our website. We also have the FBT guide for employers. And of course, you can seek assistance from a tax professional. Once as an employer, you understand how FBT works, my biggest advice to employers is to follow those 4 key steps. So the first step is to identify that you're providing a benefit. And I've said it a few times already. If you know what the benefit is, then you can look at those different rules and the different obligations that you have for each type of benefit. Once you understand what those obligations are, then you can determine the taxable value. There are different calculations for the different types of benefits, but there is a step-by-step process you can go through to work out what that value is. The third step is to lodge, report and pay. So you will need to lodge an FBT return, report those reportable fringe benefits amounts in your employees' income tax statements and single touch payroll, and then pay any FBT liability owed by the due date. So the employer is responsible for the FBT liability. Now that final step is to keep the records, and that's keeping that at every step along the process, whether it's some declarations you need or how you calculated the taxable value. What we have noticed is that some employers sometimes skip those first steps. So they don't identify the benefits and they don't determine the values. They just go straight into lodging, reporting and paying, and that can result in mistakes being made.
Thanks, Peter. And I definitely agree with you in that analysis, particularly in the first point that you raised around the challenges employers face in identifying the benefits that employees receive. Particularly for large organisations, information often needs to come from a variety of sources. For example, your employee reward and recognition data often comes from HR. Your motor vehicle data may come from the fleet team. Entertainment and other expense data may come from the GL and may be the responsibility of the finance or accounting team. Unless organisations have good, robust processes and procedures and the appropriate governance in place, it is very easy for benefits to get missed, resulting in FBT errors that Peter talked about. In addition, this pressure is only increased by the small time frame that exists between the end of the FBT year and the due date for lodgement of the 21st of May for employers that prepare and lodge their own FBT returns, noting that tax agents such as BDO have access to an extension to lodge returns until 25 June. Turning back now to Peter, what are some of the common mistakes that the ATO sees employers making?
Oh, look, Ben, I think that you talked about it there when you talked about having good governance practices in place. It is getting those basics right. So it's simple things like identifying the benefits in the first place. As you said, they may be provided through a range of different sources. So making sure that you tag those items and recognise that they're a benefit. It's really not okay to put your head in the sand and hope that the ATO is never going to ask you about that amount that you might have paid over there. So really making sure you identify them, keep track of them, and work out then what you need to do in terms of it. We also see employers aren't keeping the right records to justify their calculations or their exemptions. And some of those records need to be retained by your employees. So it's not just something that you have to do as an employer. You really need to consider what your employees should be doing as well. It's not okay for employers to lodge a nil return or send us a notice of non-lodgement by the due date and then work out if they actually have an FBT liability later. As you know, you need to have your records at the time that you lodge your return or the 21st of May. So you need to have made sure that you've actually done those calculations prior to that date. So on that point there, I did want to say that it's not okay for an employer to just then not take those steps before their lodgement due date and just go in lodging a nil return and then lodge with, I suppose not lodge, but intend to use an employee contribution later to reduce that FBT liability to nil. As I said, you need to have done those calculations, have those records at the time that you're lodging your FBT return. Now, one of the most common benefits that employers do provide their staff is a car or a ute, and we see quite a few errors in relation to cars. The first one of those is treating cars as 100% business use, even though they're used or available for use for private purposes. We did have someone recently try and tell us that the Porsche, the business Porsche, was actually used to tow the crane, and they towed it down the motorway frequently. So I'm not sure if anybody else has seen a Porsche towing a crane, but if so, then maybe their story was correct. We also do see employers treat all eligible commercial vehicles as FBT exempt. So that's your dual cab utes. And they're not actually thinking about the private use of that vehicle. And we do see a lot of people don't keep a valid logbook, or the logbook is not representative of a sample of the actual travel. So I do want to talk a little bit more about the logbook because it is an issue that we do come across a lot. It is a really important record keeping obligation for staff with a car or a ute. So if you choose the operating cost method to value the benefit, and that's usually lower than the statutory method, then you need to ensure that you keep a logbook that includes enough detail to clearly demonstrate what the car is used for during the logbook period. When I talk about car here, that may also include your dual cab utes. So it needs to include your odometer readings, your start and finish times, your explanation of business use, and identify that use separately to the personal use of the vehicle. Now, if we come along and we have a look at that logbook and we see discrepancies or inconsistent recordings in logbooks, or we see insufficient information about the purpose of the journey, so just say your odometer readings don't match your service records, they're things that, you know, are really clear that the logbook isn't representative of your actual travel, then we might deem that logbook to be invalid. And because it's invalid, you can no longer rely on it for the operating cost method, and you will have to use the default statutory formula instead. Now, that will often result in a higher liability. So you'll end up with a bigger bill than if you'd done it correctly the first time. So just to reiterate on that, if you are providing your employees with a dual cab ute, don't just assume because it's a commercial vehicle, it's FBT exempt. If there is private use of the vehicle and it doesn't fit in within the parameters of being limited private use, you might end up with an FBT liability. And often what we do see here is there's no logbooks have been retained. So you're going to end up with a liability using that statutory formula method.
Thanks, Peter. That's really good information and some really good practical tips. And we certainly agree that the classification and treatment of vehicles continues to be an area where we do ourselves receive plenty of questions and interest. As Peter just mentioned, and contrary to popular belief that's out there in the marketplace, there is actually a two-step process when it comes to identifying whether a vehicle is exempt from FBT. The first step involves identifying whether the vehicle is one of the types that may be eligible for exemption. This is where the common misconception arises. These vehicles that satisfy the exemption criteria are not automatically exempt from FBT, but rather eligible for exemption. The second step involves confirming that the private use of the vehicle is minor, infrequent, and irregular. We'll discuss separately how we assess this condition, but firstly we'll deal with the circumstances and how we determine whether a vehicle is eligible for exemption. Going back in time, this actually wasn't a complicated exercise or analysis, as the ATO used to publish a listing of the vehicles that were potentially eligible for exemption. However, given recent developments in this space and the large number of additional vehicles that are out in the marketplace, this is clearly no longer a practical alternative for the ATO. Employers are therefore responsible for completing this analysis on their own accord to determine whether the vehicles fit within one of the following exemptions. The first one being the car exemption. This arises where the vehicle has a carrying capacity of less than 1 tonne, but the vehicle is not principally designed for the purpose of carrying passengers. Or secondly, the commercial vehicle exemption that arises where the vehicle has a carrying capacity of greater than 1 tonne. Notwithstanding the fact that formulas exist in the legislation for determining whether these vehicles meet the specific exemption criteria, these are often time-consuming and administratively burdensome for employers. As an alternative, there are various operators in the marketplace that offer data analytics tools that can assist in this instance. These tools normally involve you providing details of the make, model, and registration data and the type of vehicle, and these organisations provide a report that summarises the FBT classification of the vehicles in question, providing certainty and savings for your time and effort. If you have a significant commercial fleet, this may be something that is well worth looking into. Having now determined that our vehicle is exempt, or potentially eligible for exemption, I should say, the second step is to determine whether the private use is minor, infrequent, and irregular. Historically, there was limited guidance from the ATO on this particular term and what it actually meant, with an example frequently being given that it would include an infrequent trip to the tip to remove household rubbish, as an example. In recent times, the ATO have released their practical compliance guideline that outlines their approach to compliance in respect of exempt vehicles. In practical terms, the ATO will not apply compliance resources where the following criteria have been satisfied. The vehicle is provided to the employee for business use to perform their work duties. The vehicle has a GST inclusive value less than the luxury car threshold at the time the vehicle was acquired. The vehicle is not provided as part of a salary packaging arrangement. The employer has a policy in place that prevents private use of the vehicle and obtains assurance from the employee that the vehicle's private use is limited to the following scenarios: that no single private journey exceeded 200 kilometres in the FBT year, and that the total private travel in respect of the vehicle was no more than 1,000 kilometres in respect of the relevant FBT year. While these practical compliance and these guidelines are useful and welcome from the ATO, it does raise a number of interesting considerations. For example, what about where employees are based in rural areas and have to travel significant distances? They could have limited private trips, but given the vastness of the countryside, may exceed the safe harbours prescribed by the ATO. In this regard, we note that the practical compliance guideline is exactly that, and employers are not obliged to follow these. Employers can, of course, adopt their own practices and procedures when it comes to determining their appropriate treatment of exempt vehicles, and often this will be governed by their own internal risk management procedures. For example, one scenario that I've seen people or organisations adopt in applying some of the terms of the PCG to their own specific circumstances is adopting a de minimis private use percentage of 5%. And their logic in terms of applying this was, well, the PCG prescribes private travel of a maximum of 1,000 kilometres in the year. Your average vehicle would probably travel, 20,000 kilometres in the year. 1,000 on 20,000 is 5%. Now, again, noting that there are other conditions and criteria that need to be, considered and the situation looked at in totality. But these types of practical alternatives do provide employers, with some, I guess, guidance or procedures that if they wish to assist in, determining whether their particular vehicles meet the conditions for exemption. Closing, I would like to cover some of the record keeping requirements in respect of exempt vehicles. As we may all be aware, you don't have to keep special records to be eligible for exemption. However, you need to be able to demonstrate that the use of the vehicle at all times met the private use criteria. Some best practice alternatives I've seen in this space are as follows: having the employer complete a logbook, as we've touched on earlier, providing appropriate instructions to them on how to get a true picture of what the vehicle's private use percentage looks like. Noting in dealing with exempt vehicles that home to work travel is actually business, and the only time effectively in the tax legislation that this has this, classification. Whilst this may seem like an administrative burdensome step or requirement to impose on your employees, as we mentioned earlier, a number of these vehicles, or these types of vehicles now have fleet and fleet telematics. And this tracking can often be extracted and analysed. So it may be worthwhile having a look at, what extra material you have available in respect of your vehicles and looking at whether you can extrapolate out or pull some report from the fleet telematics system to give you some extra information and insight in terms of how your commercial vehicles are being used. Other options include having a policy in place that is actively enforced and limits private travel of the vehicle altogether, or to those circumstances that may have been announced in the PCG. Best practice also in this instance would require an employee to sign a declaration on an annual basis that they have complied with the conditions and that the private use was minor, infrequent and irregular. This obviously would assist employers with their governance perspective. Steph, outside of exempt vehicles, There continues to be challenges and issues in respect of electric vehicles. Do you have anything specific to share in this space?
Thank you, Ben, for raising this. EVs is a fringe benefit category that's close to my heart, being an EV driver myself. We are seeing more EVs on the road every day. There are more EV makes and models hitting the market, and more employees taking advantage of the FBT exemption for EVs that took effect from 1 July 2022. So it's been nearly 3 years since that provision took effect. However, being a relatively new provision, there are certainly some challenges that we are seeing clients facing. And this is probably one of the areas that clients are raising with me the most. So to cover off on some of those challenges and things to know and be aware of, firstly, the in-home charger. Now, we got clarity from the ATO a while back that that does not qualify for exemption. So for any employees who are salary packaging an EV, it's really important that the cost of the EV charging facility is paid for outside of a salary packaging arrangement. Because if it is paid for within the salary packaging arrangement with pre-tax funds, there's going to be FBT obligations that arise on that charging cost. And it's not cheap. It can be anywhere from $1,500 to $2,000 or more. So important that that is paid for by the employee outside of a salary package with after-tax dollars. A second consideration to be aware of, reporting obligations. Now, there are very few exempt benefits that attract reporting obligations, but EVs is one of them. So it's really important for organisations and employers who are providing EVs to their employees that you are still conducting a taxable value calculation. In order to get an RFBA, you need to complete the taxable value calculation, whether under the SAP formula method, which would probably be the ideal valuation for a salary packaged vehicle, or under operating cost if there's a logbook, as Peter discussed earlier, and if it's used for business purposes. So completing that calculation will mean you can work out what the reportable amount should be if it exceeds the $2,000 threshold in an FBT year. Then you will have to report that on the employee's income statement. Another consideration, and this is particularly relevant given it has been nearly 3 years since the exemption was introduced and we're seeing more EVs, it's second-hand electric vehicles. Now, one of the key requirements to qualify for exemption is around the LCT. LCT could not have been payable before the benefit was provided. So if an employee is looking to salary package a second-hand vehicle, it's really important that you ascertain whether LCT has ever been payable. So even though the vehicle may not exceed the LCT threshold, doesn't necessarily mean LCT wasn't payable initially if it is a second-hand vehicle. The ATO website has some handy information available around the checks to be conducted to determine whether that criteria is met. Moving on to the charging cost itself. Practical Compliance Guideline 2024-2 was issued by the ATO last year that provides that where employees are charging their vehicles from home using their home electricity, they are eligible for a 4.2 cents per kilometre reimbursement for their charging cost. There is some guidelines in that PCG that is really useful to know. Some key things to consider. So this will be relevant for salary packaged vehicles or employer provided EVs where an employee is charging that vehicle at home. It's also relevant where an employee has a self-funded EV and is claiming a cents per kilometre allowance for business travel. So it's important for those employees who are making a claim for a self-funded vehicle that they are getting paid that 4.2 cents per kilometre rather than the higher amount that is available for non-EVs. So employers should ensure they've got that particular wage code set up in the payroll system. Also important to note, plug-in hybrid EVs cannot apply that PCG given they're not pure EVs and they also are part fuel vehicles. And now for wrapping up on this particular topic, I do want to mention a question that I get from many organisations nowadays. It's what are the FBT implications if an employer is providing on-site charging facilities? I know that employers are more aware of, or they've got more employees who are using EVs, driving EVs or salary packaging EVs. They want to incentivize people to come into the office, so they're installing charging facilities at their office. What are the FBT implications? Now, a couple of things to consider. If an employee has a car fringe benefit or a benefit that they're charging, then it's going to qualify for exemption there's a particular exemption that applies for that charging cost. However, for those employees who are charging a vehicle that is not a fringe benefit, so for example, they may have purchased their own EV outside of their employment, they could be driving a partner's EV, that particular exemption does not apply. So the FBT implications will need to be considered. What will need to be assessed is the frequency and regularity of that charging and whether the minor benefits exemption can apply. So it's really important that organisations are implementing governance, processes and procedures to collect that information so that the FBT implications can be assessed. And if there's a liability for any employees who are charging vehicles that are not car fringe benefits, so that that can ultimately be captured in your FBT return. So EVs, as I said, is something that we're getting a lot of questions from organisations and from clients. But Peter, we as advisors also get regularly asked about the ATO's compliance activity. Where is the ATO focusing its attention and what triggers compliance activity, particularly in the FBT space? Is this something you can please comment on?
Of course, Stefanie, everyone loves to hear what we're looking at. Now, look, the ATO uses and collects a lot of data. So we get data from third parties, we get information reported to us that employers report in their returns. And we collate that information and try and identify employers who appear not to be complying with their FBT obligations. So there are a number of areas that we do focus specifically on. The biggest one of those is employers who are simply not reporting and paying FBT when it appears they should be. So that's my comment. Don't stick your head in the sand. We are looking for employers who should be reporting and paying FBT. We're also looking at employers lodging nil returns when it appears that they are providing benefits and the employee contributions don't appear to be sufficient to reduce their liability. We continue to focus on employers who provide motor vehicles and dual cab use to their employees. On the point of audits and reviews, I would like to say that sometimes we do just focus on your FBT obligations, though sometimes it might extend out to your super guarantee or your pay-as-you-go withholding obligations as well. So don't be surprised if we come and ask you about a number of obligations at the same time. This year, we're also going to be contacting tax agents where it looks like their clients should have FBT returns and they aren't lodging. So we will be doing a bit of analysis around some agents where we think they may not be asking their clients the right questions when it comes to FBT.
That's great. Thank you, Peter. Some really great insights on the ATO's compliance program, where you're focusing attention and activities being conducted. Judy provided a brief FBT update earlier in the session. Is there anything additional you think employers should be aware of?
Oh, look, I think just as Judy touched on earlier, the FBT exemption on plug-in hybrid electric vehicles is coming to an end. So from April 1st this year, they'll no longer be classified as zero or low emission vehicles under the law, which means they won't qualify for that exemption anymore. So that means that this year will be the last year that most of them will be exempt from FBT. There are some exceptions to that, and I'm sure that Judy covered them earlier. Now, I think there's also of interest to people is a method to value the electricity costs for plug-in hybrids, and you mentioned that earlier, Stefanie. So similar to those guidelines that we did release last year for electric vehicles, we consulted on this topic during 2024, and we should have some new guidance available this year, and that will provide a straightforward solution to calculate the cost of fuel and electricity for those plug-in hybrids. And you can use that for both FBT and income tax purposes. As we approach the end of the FBT year, I also would like to remind employers that this year is the first FBT tax time when they have the option to use those existing corporate records instead of travel diaries and some employee declarations for certain benefits. Now, you can still choose to use the current approved forms if you've already got really great processes in place. You can still keep using them, and you have a choice to use a combination of both methods for each employee and each benefit. So you're not limited. If you choose one method, you're definitely not limited to retaining that method for everybody. Though I do want to call out, if you do use your existing corporate records, they really need to be good enough to support the FBT return at tax time. So they have to have that minimum required information at the time of lodging the return. So, for example, you might have an employee who's great at recording all of their travel in their detailed work calendar. So you can use that instead of a travel diary. But if you've got somebody who's a bit haphazard on that, then you still might want to retain that travel diary. There is more information on our web with some examples that you can have a look at there about the changes. So I might just wrap up on my key messages if that's okay. So I would like to encourage employers to use our resources or seek help from tax professionals to understand how FBT works, preferably before you offer benefits. Get those basics right. Make sure your payroll and accounting staff understand FBT and what might be a benefit, as well as any of those recent law changes. Keep the right records to support your position, and that might mean ensuring your employees are keeping records and are completing any declarations. And if you've found a mistake, you should correct it as soon as possible to minimise penalties. And if you are having any trouble meeting your lodgement or payment due dates, contact us before the due date. Now, given how close we are to the end of the FBT year, now's a really great time for employers to have a think about whether they have provided any benefits this year and get those records organised ready for tax time.
Thanks, Peta, and thanks for your really great insights that I'm sure all our clients today are really going to benefit from. That concludes the panel session. I'll now hand back to James to close off the webinar.
Thanks very much, Ben. And look, thank you very much to Peta in particular and Steph and Judy as well for the insights that they've given us today. Look, I can't agree more with Peta's comments around starting early. One of the biggest challenges we see is that everyone thinks that there shouldn't be a benefit, but you just don't have the records to support it. And you're asking an employee, potentially 12 months after they did something to tell you, why were you there? Who was with you? And it's really, really hard. And you've got a really short time frame to do things necessary to finalise your FBT return. So absolutely start early and understand what your obligations are. That's a really, really good point and can actually save you a lot of grief as you kind of run through the FBT season. Look, once again, Peta, really appreciate your insights, your guidance, and these sessions are designed to try and help employers do the right thing. And the vast majority of obviously clients that we're speaking to are trying to get things right. And this is really helpful for us to kind of reinforce that these additional steps can get things done correctly. And also to Ben and Steph and Judy for all their input into the session today. Really appreciate your thoughts on all the topics that we've covered. If you've liked this, then please subscribe to our latest news, articles and publications, which are available. And you'll certainly, after this session, as I mentioned up front, you'll receive a copy of the slides as well as the webinar presentation itself. So that you can relive that over and over and over again if that's something that tickles your fancy. But we'll also have some more information or another session covering year-end employer obligations, so things that are still close to Peta's heart around PAYG, single touch payroll, employee share schemes, so all of those year-end obligations, as well as things like payroll tax. And we'll be running another webinar towards 30 June or shortly after 30 June, so stay tuned for that. So thanks everyone for your attendance. We really appreciate you working with us as we manage through some technical difficulties. but please enjoy the rest of your day. Thank you very much.